And good morning. It is sometime. It's 8 o'clock in the morning on the 15th of November, 2024. Welcome. Here we go again. The purpose of this stream is my virtual video journal for trading. It's just something I'm trying rather than, I can't write and think and focus at the same time. So this looks to me like about the best idea. And I can, by streaming it to YouTube, I can review this on any device. It's a permanent record. There's ultimate transparency and accountability here. I've made a commitment to only take trades on the stream. That's why it starts at 8 o'clock every morning and goes through until cash close about 1500 at night in the afternoon. All times here are Central Standard Time that I refer to or that are on my chart. This is not financial advice, of course, and I'm not a financial advisor. So, if you're looking for that, go watch cartoons. What this is it's my trading journal, looking at my live screens. Any trade that I make or take or anything that I do on my trading rig here is captured. And it's essentially, being able to look over my shoulder while this happens. So that's pretty much that. Now, we did have some numbers out this morning, and there was a pretty good reaction here at 7:30 to stand by. Well, we had core retail sales and retail sales there at 7:30, and then we've got some miscellaneous Fed speakers and a couple other people along the line today who will be probably have some impact on the market. But this is the major report that hit at 7:30. In terms of pre-market, it's perhaps easier to see what happened overnight here. This is yesterday's, first of all, this is the Investor RT, my charting platform. This is Bookmap, which I guess is self-explanatory. This is a Renko chart for the ESD's contract. This is NQD's. This is the micro composite, which is just daily bars, RTH bars. And wherever price overlaps, I draw a volume profile around it, which by extension gives me a VPOC and a high and a low, and in this case, a gap low and a gap high, and a higher time frame view of the market. These red and green lines are pushed, they're high volume and low volume nodes, which are pushed automatically to Bookmap. This is pretty weird. The price levels have gone off my chart over here. Anyway, there's a series of price levels which are pushed to Bookmap from my IRT, including the POC and those kind of things. This is the volume profile. This is the RTH period yesterday, and this is where we're trading overnight. So inventory is essentially short pretty much all night, because yes, absolutely all night, because here was the close. So I would be expecting probably responsive buying to take some profit. We're going into a weekend and it's a Friday on the open. I'm kind of disappointed about this. Let me refresh my data and see if this comes back to life. I just noticed that that those price levels weren't on there. I've been having some confusion lately. Let's, while that's refreshing and reloading the data, I will go through some of these. I'll go through some of these levels on Bookmap. This is the high time frame column which reflects the overnight or the something's on. For example, the various levels from the micro composite. These are the volume nodes also pushed from the micro composite. This is a high volume node. These are the, this is the volume profile of the full session, which started plotting at 1700 last night and will plot and continue through today to 1600 when the market closes. This is the RTH period, which will reset today at 8:30. Delta for RTH, the chart volume profile, which just plots what data you see on the chart. That's why it's silly looking. These are the price levels which are pushed automatically from Bookmap, from IRT to Bookmap. Man, I need to wake up. And this is my notes column where I will enter the associated statistics for these price levels, flag the migrating VPOC, that kind of thing. First thing I do here is I change the title to the open that I'm expecting. So it's lower out of range. Whoa, lower out of range. Take off cap locks, okay. Now that serves no purpose other than for me when I review the stream, well today, but when I review the stream at some point in the future, I'll know immediately by looking up here what the open type was and then how the market played out in relationship to that. I also will put the statistics in here, which I mentioned, and any kind of flags. Now, there's no indicators on my Bookmap or IRT. I do have these price levels, and I do use the following. A VWAP for both the RTH period and the Globex period, or full session. A mid for the RTH session only. Then there's a POC, which is this darker yellow, for the full session. POC meaning point of control. And there's a POC somewhere up here, right here, for the previous RTH session. And the reason this flag says naked volume point of control, naked meaning it has not been retested by price in a RTH period after this was made. So this is the point of control last night when the RTH session closed. Therefore, it's the naked volume point of the control for the most recent RTH auction. That's why that flag is always there. I put that in after the market closes each night. All right, so the POCs are also nothing mysterious or magical. They are just the points of the price at which the most contracts have traded so far in the session. So at 59.45 quarter, the most contracts have traded so far in the Globex session, 51.59. Now, the minute that any one of these prices down here, for example, changes to 51.60, this POC will migrate down there. That's all there is to it. It's the price at which the most contracts have traded so far in the session. Developing value area high means the current auction. The value area high, which all this stuff's up above us, the value area high and low is for the previous RTH session. This is where we closed yesterday, so we are opening now. Here we go again with the opening type. We are below close, and we're out of yesterday's range, RTH range. So that means we're going to be opening lower out of range. That's the opening type, which will decide the statistics that I input over here. The IB high and IB low, which I don't even see on here anymore because we're so far below it. Get up here, maybe we can find, there's one. Well, unfortunately, that's at the previous RTH high, but this green line signifies the RTH, or the IB high and low, and that's also nothing, and this is covered up too, that's irritating. Anyway, the IB high and low are nothing other than the high and low of the first 1 hour of the RTH period or session. It's called IB. It's an old market profile term. meaning initial balance. But none of this stuff is magical or mysterious. It's just price levels, price action, and data. So the sooner you accept that, the easier things will be, I believe. Now, I will be right back. Okay, so what was I going to say next here? Yeah, so I've covered the levels. I've covered the, I guess the next order of business would be the statistics. This IRT is not coming right, and that's really got me disappointed. I'll show the, I'm going to move over here to the statistics study, explain that quickly, and then I'm going to restart IRT. So we're looking to open lower out of range, right? That's this one over here. The way this works is real simple, like everything else. It's just data and statistics. This study looks back at 2002 days. Of these 2002 days, 280 of them only, 280, opened lower out of range. That's only 14% of these days, okay? Of these 280 days, price action revisited the overnight point of control 82.9% of the time. So we jump back over here. I hope this is working now. To overnight volume point of control. Oh, it's not. Okay, let me switch something here so you can see these pop-ups jumping around. Okay, so here we go with 89.2. Is that what I said? Other way around. Dyslexia is a wonderful thing. 82.9% of the time. Bam. That's all there is to this. The whole statistics story. The statistics are derived from a study which looks back at 2002 days. The particular parameters are the open type, which is controlled by the expected open of today's RTH session as it compares to yesterday's close, yesterday's RTH session close, and yesterday's RTH session range. That's all. It doesn't look about the end of the earth, who got elected president, is there a war somewhere? It doesn't pay any attention to any of that. It's only got those two criteria. So these are just statistics which have been borne out 82% of the time over a low sample size where we opened lower out of range. Price came back and revisited the overnight volume point of control. That's it. Another biggie is usually the mid, which is 67.9, the overnight mid. And I can't even see that here. Up here, 67.9. And then we have overnight low, overnight high, previous RTH high, previous RTH low. There's a whole host. There's all of these statistics associated with all of these price levels. And you can just enter them as I have done so now. And it's real Simple and real straightforward. I'm also going to make a post that I do every day. I'm getting ready for that over here. This is a post I send to the TLab every day. What is the TLab? It is it's called the Traders Lab. It's a Bookmap Discord chat room. Started and run by a guy named Tom B. Now, Bookmap obviously sponsors it, and it's on the Bookmap Discord server, but it's completely free, and you don't even need to be a subscriber to Bookmap in order to participate. So it's like, free is good, okay? And in this case, it's especially good. It's the only site that I recommend for the following reasons. Tom is genuinely concerned with helping traders get better. He's a professional trader for 45 years, very successful. And the most important part you'll notice immediately, nothing is for sale. He's not trying to get you to be a mentor, join his mentor thing, or buy some indicator from his, website or any of that crap. He is, in my opinion, and I've not seen any reason to doubt this opinion, he's genuinely interested to help traders get better. Bookmap, of course, would like people to see how well Bookmap works so that they can have more subscribers. But there's no pressure to subscribe or to do anything else. So that's truly, it's truly a pearl in the garbage as far as I'm concerned. And it's the only place I recommend on the internet, including other Bookmap Discord presenters or whatever they're called. I have certainly not listened to all of them, but the few that I have listened to, the one or two that I've listened to besides Tom and the Traders Lab, is they're just typical internet crap. Struck me, the second word out of their mouth was that indicator's available on my website, or pay me $975 a month and I'll mentor you, and blah 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 blah. I just shut them off and went back to the TLab, and so that's the only place I really listen to there. And I'm not saying that anybody else is not great or there's not other really good people. I'm just saying that's been my experience so far. And I'm kind of a, if it ain't broke, don't fix it guy. So if I am pleased with the results and with the community and the leader of the Traders Lab, then I'm not going to spend a lot of time zooming all around to find something different. I'm not a honeybee. When I find a flower, I stick with it. All right, so we're going to have this post out at 8:20, which I do every day. I post the market numbers every morning early about 6, and then I post this one snap every day. And the purpose of this is to kind of give traders who don't have all the different charting stuff available, all the levels that they might want to have through the course of the day. POCs and historical stuff, and this is the current auctioning overnight and the previous RTH overnight RTH like that. So just the idea is just to kind of try to contribute a little and be a little helpful if possible. So that's that. And I'll make this snap in a second because my wife is calling me for breakfast, and that's a priority. Fuel and, ready to roll. Now it's going to be kind of close to the open, and I'll enter the rest of these statistics. You notice now that the VPOC has migrated lower, right? So that means the statistic has to go down here. We're opening further out of range and further away from close. It's been quite a sell-off here. And I know some guys that were, Tom and those guys were shortening up around 50. So they're down 12 handles now. They're in the money 12 handles. I'm having trouble with this audio gear, so when I review the stream, if there's, if I don't leave the streams public unless there's a trade. If there are any trades, then they remain public with all the chapters. If there's continued audio issues, I'll note it in the title of the stream also with the results of the, in terms of ticks for the trades. And then I've got to get this, I upgraded to a Shure SM7B and a Mackie DLZ and a bunch of stuff to try to improve the audio, and it's been exactly the opposite. So I'm going to send this DLZ back because it seems to be having some issues, and I can't quite get my head around how to use the Shure properly either at this, or maybe it's all a function of the DLZ, I don't know. I always consider it's probably operator error on my part. So, oops. I always take that as the first assumption that I'm the one that's screwing up somehow. But I've talked to those guys a few times and who are real supportive and helpful. And their suggestion was to return the box, so that's what I'm going to do. And there's the snap. And I can shut that off now. And this down and bring this back up. And yeah, now I'm going to reboot my, well, it's too close to the open here. Oh no, they're back. Okay. You see how weird this is? Now I've downloaded, rebought, and my price levels are back on here. So I don't get it. That's what I was worried about. I wasn't seeing the price levels here on my chart, which should be just like they are now. So that's what I was looking for. All right. And I'll save that, get ready to move it to full session. We're going to open in 8 minutes. I'll go on mute here and be back. Okay, so here we are back. Hopefully this audio is working because that's just so frustrating. This is essentially all the same gear that you see on every podcast. Rogan, which I never watch, but I've looked at his pictures, and anybody else, and they're just talking normally, and that's my whole goal. It's just to be able to have this function properly and be pleasant to listen to when I review it. And here we are at approaching, where am I? Approaching the open, 2 minutes, okay. Well, forgot my water bottle, back. All right, here we go. Buckle up. We're going to open at date 30, right down here. Remember, all times that I refer to and that are visible on my charting is Central Standard Time. Once again, the open type compares the potential open, which is right here, to the previous close, which is up here, and to the previous range, which is this one. So we are very definitely lower out of range. What is that really? That's called a gap down. So we're going to be in a gap open, a gap lower open. And we'll see how that works out. I'll start to track the migrating VPOCs here as soon as we open. Which is going to be pretty darn quick. And this open will be the gap low. The previous RTH close, there we go, will be the gap high. And here's our first VPOC migration. That's our starting point. The reason I do these flags, obviously this yellow brick road here, the yellow line will continue to plot all day on both my book map and my IRT. But pretty quick it's going to scroll off the left of the screen. And what I try to achieve is that I can look at this area right here, the hard right edge of the chart, and see all the data I might be interested in. That's the goal. And there we go. So we've had, remember I was thinking about some responsive buying. A couple of reasons. That's profit taking from, we've been short all night. We're open here now. I would imagine they're going to take some profit. Also, it's a gap low, so we have gap rules coming into the picture here. Forgot to put the open thing, not that it matters. So here's that IB low and IB high flag, which, as I was pointing out earlier in the pre-market, are just the high and low of the first 1 hour of the RTH period. Now, I just realized, oh, damn, what was that? Boy, this mouse is getting, I keep bumping into stuff, and it's got all kinds of tricky buttons on it. Anyway, I just realized that I have yet to establish or enable my trading facility, which is pretty stupid, but that's the case. So I'm using a multi-brackets 2-lot risk neutral package. Both contracts have a stop at 12 ticks. The first trade take profit is a risk neutral scale at positive 12 ticks. Once this first scale is achieved, the trade is risk neutral. The worst that can happen is a scratch unless you're crazy and move your stop away from entry. In this case, the runner's at 48 ticks. I close that. Now on Bookmap, you've got to click that lock button and activate the trade control panel. In my case, I use the DOM only because I initiate trades with a keyboard, and I can manipulate stops, targets, or add resting orders here on the DOM only. If you have chart or both, you can use this, what they call the live data or active data column, which is right here. You notice it's only got price. It doesn't have all the volume bubbles and all that kind of stuff, and the stops and targets and everything. If you accidentally click over here someplace and you've got the chart or the DOM or both activated, you've entered a trade or an order, which you may not have intended to do. So I use the DOM. I confirm that it's a 2-lot package, so I know that's correct. I shut this off because I don't like trading or think you should trade your P&L. And now I can click anywhere I want to over here without worrying about it. And I'm not ever going to click over here someplace by accident and make a mistake. There's our swing high. Here's our swing low. How low can you go? And we're only talking 7 points. So far, 7-handle range. Not much. One thing about Bookmap that I think is important for me is to keep this scrolled out or scaled out or zoomed out or whatever you call it so that I can see these grid lines to give me some sense of scale for market movement or price action movement. If I get it in real tight like this, I can't tell, is this a lot of movement? Is that much? Is it meet my range requirement? Which brings me to another part of my trade plan, and that's the range requirement. In order for a entry to be valid for me, my trade plan, I have to have an unobstructed path to the first risk neutral scale, which is, in this case, as we just talked about, is 3 points or 12 ticks. So for example, if I'm here at the IB low and I want to trade back to the VPOC, I can't do that because the value area low and the developing value area low are both in the way. There's an obstacle before my first risk neutral scale. That's a big limiting factor. Quite one. And I need to review that, and look at us go. So the selling, now we've gone down to the ETH low, which is a very high statistic. And I'll tell you how high. I didn't get those in yet because my wife had a better idea for breakfast. Yeah, so the overnight low statistic, which we have just teased here, is 70.5. So we've just teased that one. We haven't taken it out yet, but we've just come down to it, and we will undoubtedly do so. Because we've opened lower out of range. In other words, we've opened gap low. And our open, which is right here, would be our gap high. And I'll put that in here like this. I mean gap low, sorry. And that's, what day is this? A 15-1-1, okay. Now I'll scroll up here to previous RTH low. And this is the gap low, gap high, a second gap high. And this is, that's just a quick encode for the date. So now I've got, this was one from a previous gap that we had. This is now our intermediate where we are now, and this is the where we are from this one. This was a big gap. It's kind of confusing, but I can show you maybe easier on the. Oops, Wrong chart, sorry. Over here, if you see that this is where we're trading right now, eh? So we gapped below here to here. This is yesterday. This is the low, and this is the gap down yesterday. Here is the gap high from this gap, this little short gap right here, and this was the gap high and the gap low. The huge gap on the election is this down here, and they're going to get that absolutely. The market goes down to go up and up to go down, and that's something you can take to the bank. Now we're having a VPOC migration lower, which is a structured trade in the TLab, and it makes perfect sense, and it's one that I wish I could properly vet or statistically verify, because it's so obvious. How can you possibly miss the movement of this yellow line? The theory is if the yellow line, which is retail or the most, we know it is the price at which the most contracts have traded, suggests that's the most fair price, because that's where people are most likely or most willing to do business. If that continues to migrate lower, makes sense that the market is going lower. So the structured trade would be a short off this VPOC migration. My problem is that every time I take a short, I can't figure out what the the balancing or the qualifying context and trigger are. Had I said, okay, we trade up, now we got through here and I take a short, well, I'm stopped out well in advance up here. If I trade up here, if I short up here, looking to get lower, that would be an asymmetric trade. And an asymmetric trade is one in which there's an asymmetric relationship between risk and reward. You could have a one-tick risk and a possible 5-point reward or something like that. That's an asymmetric trade, and it's real important. Probably talk about it some more later, but this VPOC migration trade is a setup that I would love to be able to trade confidently and have the numbers on, the vetting numbers or the statistics, but I do not. And I'm real hopeful that this stream is working. I can monitor it now on my other headset, I think. Sounds kind of like I'm in a barrel here. I'm not liking that too much, but at least there's not the big volume spikes that were happening on that channel 1, I don't think. Maybe I need to get closer, or I don't know what I need to do. I wish I wasn't so OCD. All right, I've turned the gain down on channel 2 to 55, which is the Shure. This is a Shure M7B mic and a Mackie DLZ creator mixer. So I'm just saying this random crap for a test. Now I think a little tweak on the compressor and the sound will be pretty good. Compressors are, as I understand them, even out the highs and lows in the volume swings. So we'll see. But this sounds 100 times better than the channel 1, meaning definitely I'll send this thing back. They're not cheap. Okay, and so what I've done here is change the IRT charting now to the RTH session only. So this is the previous RTH session, and here we are. This is a perfect example of the gap, right? And we've got essentially there's the previous RTH low, and here's the open or the gap low. So this is our gap. Yeah, and so you see about the VPOC migration. Okay, had I taken a short down here anywhere, I would have been stopped out long ago. Now, they refer to this as a price check at aisle 3, and it is. Also, you could imagine that we are in a mean reversion market condition, which is outside, and in this case, in, where the mean reversion, that's the reversion to the mean. And that's, by the way, the predominant market condition is mean reversion. A rotational or auctioning market is much more prevalent than is a trend. And now we traded up to the mid in the VWAP, and I'm going to take a trade here, which is called the, I'm too late. I should trade and talk. I got to do that differently. Reminds me if it reminds me of an old acronym from flying. Navigate, and then, aviate, navigate, communicate. In other words, fly the plane, figure out where you're going, and then talk to somebody. And that just cost me a trade right here because I saw this mid to the VWAP to the POC, which is a structured trade and one that I have traded successfully and have some numbers on, but not properly vetted. And I was getting ready, thinking about talking rather than thinking about trading. And I didn't hit that entry. I would have been 37 to 34, would have just been scaled, but it has the criteria, right, of being scaled ahead of with no obstacles, and then my target being the mean. And it would be a scratch right now. So, okay, thank you. But, aviate, navigate, communicate. So we're approaching a VPOC migration possibility here. Here's our VPOC, the volume point of control. Again, the price at which the most contracts have traded. So how do I know it's going to migrate? 77,015 contracts have traded here. 6,500 contracts have traded here. So in 500 or 400 and change contracts executed at this price at 36, this VPOC or this volume point of control is going to migrate up here. May never happen, but it's pretty likely at this point. We have a gap above us. We've tested. Sorry about that. We've tested lower. We've tested down here. We got our IB low down at 29.25. Mean reversion tested high, almost to the outside edge up here. And now we're fussing around back here. It's the auction, you know. Is this too high? Is this too low? This is the most, at the moment, 32.5 is the most, considered the most fair price by the majority of, you know, I don't know how algos think about fair, but anyway, you get my point. I mean, it seems a little bit, in this day and age where 80-something% of the volume is controlled by algorithms or machine trading, I don't know how that works, but you got to remember that algorithms or high-frequency trade machines are programmed by people. And even AI is originally trained by people. It doesn't come out of nowhere. So, and the true algorithmic machines and algorithmic trading shops, as I understand them, have guys or people monitoring the machines 24/7 and making constant tweaks. So I think what they're using it for is the rapid execution, at microsecond execution, but the overall logic and things are being controlled by people, I believe. Could be completely wrong, but you never know. So I'm sorry I didn't do that. Pretty sorry I didn't take my the trade that I was talking about, which is the mid VWAP to VPOC, and then I'd still be sitting on it to the tune of about 10 handles. And here we go with another suspected mean reversion. Outside in. Outside in. Oh, look at there, within a tick. a word here about breakout trades or momentum trades. For me, they are FOMO, and I classify them as an error, even though they work, just as this one here is apparently working. For a lot of reasons, basically emotionally, I figure that I get in them based on FOMO, fear of missing out. And if you think back to my discussion a few minutes ago about asymmetric trading, it's about the worst possible thing you can do. You enter a short in here somewhere looking for this breakout. 27 to 25, you're not scaled. Well, 24 you might be. Risk neutral scale. But more importantly, look where your stop is. Towards the POC, towards all of this traffic that is where we've traded before. This area down here has not proven itself to be fair or popular. Up here has been. In my opinion, and maybe this is a good time to talk about it, trading as a business as opposed to a video game or gambling goes like this. Trading, professional, sustainable, consistently profitable trading is a business of statistics and probabilities. What does that mean? Well, first of all, you have to understand or accept the fact that the market is a random environment, and that it's a statistical fact that the probability of the next trade that you put on, each and every next trade, is 50-50. So to predict or think you can predict where the market's going is fool's game. What you do, what's required is away from market hours, you identify a setup and the specific criteria, which I've mentioned several times here when I was talking about the VPOC migration, the criteria to validate that entry. And then you, with some sort of backtesting software or manually if you can't do it any other way, you identify at minimum of 50 examples or occurrences of that exact setup and that criteria. That is your your data set, and then you determine mathematically, statistically, if there is a positive edge or not. If there is, then you take every instance of that trade that presents itself in the live market, and you rely on the law of large numbers to manifest the percentage of edge to your bank account. That is the way high-frequency traders, the most successful hedge fund people in the world, Jim Simmons and Renaissance Technology, the Medallion Fund, Dalio, Paul Tudor Jones, Tom Sosnoff, that's the way all of these guys trade. Any professional trader or instructors like Mark Douglas or teachers, whatever he was. They all have the same thing. Tom Hogarth, any successful professional trader realizes that it is a business of statistics and probabilities, and the key is the law of large numbers. If that sounds familiar, it's also the business model of the gaming industry from the point of view of a casino. They play no games which they have not pre-identified an edge. And then their only mission in life on the floor of the casino is to play as many instances of those games as they possibly can in 24 hours. They know that gamblers will win. We know that traders will have stops. It's a cost of doing business. And that is truly the holy grail of trading. You identify one setup and the specific criteria for that setup, and then you trade it every time it presents itself. And then you move on to the next one until you have a book or a trade plan for various different, you need to have one for different contexts. Like this, you should have a trade plan for gap down. And if you want to be more specific, which would be pretty impossible, gap down in a really strange, abnormal environment like we are in now around this election outcome and all this stuff. So I guess my problem is I try to be too accurate or too top down, rigid. I see guys talking about vetted trade, this and that. There's no way they vetted this trade. There's no way they captured a minimum of statistically significant data set of at minimum 50 examples of a trade in this environment. It's impossible. We haven't been in this environment for 4 years. So how does that work? That's the problem I'm having now, and I'm teaching myself Python to learn how to code these things up so that I can hopefully have come up with some statistics and maybe figure out, for example, and you have to have the exact same criteria to vet the trade. You can't have different 12 tick stop, 15 tick stop, 20 tick T1 target, 10 tick T1 target. They've got to be the same in order to have apples and apples, right? Compare apples and apples. And then you need a system that is flexible enough and accurate enough so that you can do what ifs. This is my opinion. Do what if scenarios. So given that I have a 12 tick stop and a 12 tick risk neutral target, what's the percentage of time that I achieve the 48 tick runner? What happens if I make it 36 ticks? What happens if I make it 24 ticks? What happens if I have the stop and the first risk neutral scale at 14 ticks instead of 12? I think you need to identify all of those things and get statistics around them so that you can optimize your thinking and your specific trade and setup. Now, that doesn't mean curve fit. And I know that past performance is not indicative of future results, but I don't know what the hell that is. So surprised when my phone rings. It's so infrequent. So we're definitely trading lower. They're making no glimmer of hope to go back to the close that gap so far. And I am really disappointed that I was not trading before talking up here when I wanted to get on this VWAP VPOC trade because I'd still be in it. And that's now 20 handles. Wow, pretty disappointing, huh? Wow. So they're continuing to hammer this thing. They're looking for that. Man, they're not going to let up. Doesn't look like. Awfully disappointing. Boom. Now is a situation where I would be hyper aware of FOMO, right? I have talked about it 3 times that I missed my entry here by talking instead of trading. I would still be in the trade, just the way I trade manage is I just bring my trailing stop down behind the swing highs. So I'd be down in here someplace, looking for lower. Really disappointing. So let's watch this low volume area right here at 1875. It turned exactly there. And back down towards the IB low. We're getting towards that 9:30, which is when the IB sets and no longer migrates. There's a well understood statistic around the IB high or low from years ago. And it has a very high probability. It's over 97% in any of the 4 open types. And it says simply that either the IB low or, keyword or, the IB high is exceeded by price in the balance of the RTH session. Now, remember that the IB low and high are not set, so that statistic isn't valid until 9:30. And remember, keyword that it says or, meaning either the low or the high. And you kind of think, well, if we're down here within a handful of points to the low, it's likely going to be the low. But that's not really a very valid conclusion, and a lot of times we'll do this kind of thing. Consolidate along here at the bottom, build this fractal up, and then go up and take out the other side, or vice versa. So it's not really a tradable statistic, I don't think, but it is a statistic, and it's very widely known and understood. Now, in the trader's lab, a fellow named Rod, who's a clever coder and trader, does a lot of statistics, determined that the high or low of the first 30 minutes is exceeded 89 or something like that % of the time by the high or low of the second 30 minutes of the RTH period. So they call that the IB30 statistic, and they call the old-fashioned one that I was just talking about the IB60. Now, you see that we've exceeded the IB low, but we're not at 9:30. So this is not an IB stat. What has happened here, as I am talking, is that the IB30 stat has been achieved, and it can be achieved, a lot of times in the second 30 minutes, right? However many seconds there are in 30 minutes, it could be, or even more frequently than that, depending on how fast the market's moving. But you understand the point, right? This is not the old-fashioned IB statistic. This is the IB30 statistic. And in a few minutes, this low will jump down here to join this flag will jump down here to join this indicator. And a word about the indicator. It's not a bug. It's expected behavior. You see how the flag is now joined up with the line? They're both pushed by the same data from my IRT. But Bookmap limits the refresh period on the cloud notes column here to 1 minute, and the indicator refreshes, looks to me like about every 30 seconds. So that'll happen all the time. The line will move, and then the flag will come along behind it. And that's, expected behavior. And it doesn't even faze me anymore. As soon as I realized that it wasn't some sort of bug or anomaly, I just, okay, no problem. Look at all these icebergs piling up in there. These are iceberg orders. These are stops. This is accumulation. Absorption, I'm sorry. Stops. God damn, wow, this mouse is really driving me crazy. I keep bumping into the to the mixer with my mouse, and the buttons at the top up there do all kind of magic stuff, so not not ideal, I guess. And here we're testing again down to the IB low, and I repeat, it's not the IB low yet. It's only 22 after. So this will not be set and will not stop moving until 0930. Yeah. I still hear a little of that volume variation. Must have to do with me coming and going back against, or shortening the distance to the microphone. I guess, I don't know. But I'm tired of thinking about it, so never mind. And here we are for another IB30. And the 907. So we've come across 100 points on the ES in 2 days. That's pretty phenomenal, huh? And we're taking her lower and lower now. We're heading down towards the low of the second election day gap. I'm sorry, the high of the second election day gap. If you see over here on my my micro composite chart, here was yesterday. Here's today's gap. We're now down here within spitting distance of this low, which is the high of this big election day gap. Yeah, and I'm just still at a loss as to why I'm getting so much volume fluctuation on this thing, but I really don't know what to do. They don't know what to do. Who are you going to call? Yeah, we'll try to have it stay as like this, I guess, until I try to sort out the compressor, which I think is the thing. I'm going to talk to them here in a little while about when they open. They're in Seattle, I believe. Pacific Standard, anyway. And I'll return it. in some bottoming action here. We've got 4 minutes to the IB statistic set, which is 0930. I would sort of expect that somewhere along the line we're going to get some mean reversion. And stop and think about all the people that are short since last night. When are they going to take profit? And it's Friday. I just have to understand what we're going to do here in another 3 minutes. I'd like to get a positive trade in the book early on. I have a couple other things I want to do. This mic drives me crazy. That's a function of OCD, I guess. I don't know mic or not, but the audio. Iceberg's chasing it up. We've got 19 stops out. That's kind of a form error 64 out, and I don't know here, 19 out there. That's kind of an exhaustion, if you can understand that thinking. The market's always looking for fuel, right? Yeah, it goes up to go down and goes down to go up. Now, over here was the big market extravaganza after the election. Then this gap, which we've sort of closed. Then this consolidation period. Now we've got a doji day, a down day, a gap down, and we're trading a down day. The thing about that you need to remember is that the market, the futures market, is a zero-sum game. That's why they call them contracts, not shares or stock. It's a contract between a buyer and a seller. In other words, for every person that sells here and here and here and here and here and here and here, somebody's buying it. And typically, the people that are doing that counter trend, or the counterparty, typically to retail, is a higher time frame. And how are they going to make money? They're going to make money by taking the price the other way, and they typically do that by hitting the stops of all the weaker hand people or traders. That's why the old saying, the market goes up to go down, it goes down to go up. Because, they get everybody one way or the other, and then they jerk the market back and catch all their stops and get all that inventory, which translates to profit for the higher time frame. Now we've taken out the IB stat. So the IB statistic has been taken out to the low side right now. And that puts us in an environment where we're looking to see, will this be an IB continuation trade? In other words, will it continue to go down and trade in the direction that it has been? Or will it be an IB failure and revert back to the mean? I'm thinking that it's going to be, my initial reaction would be an IB continuation. There's been no real indication that they have any, desire to trade higher back towards yesterday. Also, the IB failure is typically a trade that's valid in a mean reversion day, which we are not really in. We've been pretty much directionally down. So I'll just stand by here and see what I see. And what are we doing essentially? We're putting in a big consolidation area right around this fractal, higher, outside in, essentially. There's just no range or legs for the trade for my plan. And here we go. My old favorite VPOC migration. Now what's going to happen? Well, it looks like they're going down with it. That got everybody excited. So IB continue, or the WAP VPOC migration continuation down would be to a gap low. They're going to close that. Got that wrong. That's a gap high. Yeah, I've got these gaps. I've got these titles wrong there. Yeah, I got my head turned around the wrong way. The bottom of the upper candle is the gap high. I'm looking to make sure it's not a gap from somewhere else, but no, I look at the date, so I've got these gaps wrong. I'm thinking of them from the point of view of the gap and not the point of view of the candles when I put those in there. So that's not, and I think I just redid it the wrong way again. Now gap high. And what's this? I'm going to have to I got to review this. I'll do this tomorrow. This is the gap high. That would be correct. And then we should have the gap low down here, way down here at 58.23. Look at all these different gaps. So there's one. I don't know what this gap high is about here at 58.20. This is the correct gap low. This gap 06. This is not right. This is not a gap high from 06. This is the gap low from 06 at 23.25. Should be. 24, okay, call me a liar. And let me make sure the date. 506, okay. Oh, wait a second here. I'm all screwed up here. This is the gap. This is the wrong. Never mind. I'll have to go back and redo this. I got my schedules off. This is 57. That's not correct. This is 58.23. This is 06, and that's correct. And it is the gap low. 23.25, so that's correct. There we go. And now we're testing back up to the VPOC, which migrated lower. And would I put a trade on for this test and this exhaustion to trade down towards the lower the low of the day, which would be viable and valid, except for the fact that the IB low's right there. So that's not 3 points. One, two, buckle my shoe. Does that get us into the yellow? I'm trying to get into the optimum gate here, and it's not doing what I'm asking it to do. I don't know why that is. That's a lot of gain. That's 65 dB of gain just to get to the bottom of the window. 1, 2, 3. And then I could redo it. And I'll move down the gain on the OBS to 20 and see how that sounds. Oh, I heard a big reduction in the noise floor there. Still sounds pretty echoey to me. Which I don't like. And we're trading to the bottom of that IB low. 5 to 2. That would be definitely this would be a qualified entry if we could imagine that this was a I'll just keep monkey. Here we go. So are we going to look for this? Is this retest of the IB, of the VPOC migration going to be valid? This IB low right down here is not making me all warm and fuzzy, that's for sure. And now we've traded across it. If you look at today's trade, there's only one way to trade today for me, for my plan, and that's short. Because there's no question about the direction of the context so far in this first hour and change. And that test was a good one. Back to the VPOC, and looks like lower. But what would be the trigger? 242 stops out, 7 out. I guess exhaustion. This retest up and no more buyers. And now we're dancing around the IB low looking for the IB continuation trade. I guess. I'm not confident enough to put it on though. And we would just be, 6-2. Our scale would be in there. But where are we going? New lows? Are there any targets below us? Let's see. Well, there's a gap high. It's important to be conscious of the fact that this is only about an hour and 20 minutes in the market. So it's entirely possible that, there's a lot of time left to squeeze them out, get as many people short as they can, and then start looking to take profit. I'm not saying that that's going to happen, but I'm trying to remind myself of the fact that it's early in the market day. What the hell was that? So much volume that we had a aggregation right here. That's what Bookmap draws, this golden line, and you get this these red things down here in the ingest meter, and it says I'll check about a report, but something happened. Could be news. So everybody's reacting the same way on the TLab. What the hell was that? And Tom says, well, that was rude, short again. So, he's just in and out of the market. It's also important to remember that he's got what the hell is going on here? Okay. Also important to remember that he's sitting on a huge account. For him to he's trading size, and for him to take several stops is just normal. And that's the attitude that you want to, or that's the position you need to get to mentally. That's the cost of doing business, and it's the outcome of the next trade is always 50-50 in a random environment. So, what he did was when this big blurb hit up, he took that as an opportunity of a counter trend and jumped on it short. And now he's back up almost 10 handles. And the market's looking for a new low of day. I will say that if we get into the gap high, there's got to be a lot of fuel down there for a continuation lower. I would certainly imagine. I'm just not quick enough, and I was trying to figure out what caused this movement rather than trading again. Tom's assessment of that maneuver was it was a bigger player setting up a squeeze to get positioned for continued short in view of what Tom notices as a bunch of icebergs on the other side of that pop, which I am not really seeing, but okay, I believe it. Whereas instead of taking advantage of getting short up here, I would be looking to short down here, which is not asymmetrical and on the wrong side of the market swing. And I'm almost tempted to take a short right in here, because that gap high, if we get below that gap, that's going to go somewhere. Of course, another one of those pops like just happened, and that's going to be pretty disappointing. I really blew my opportunity earlier. And I'm certainly glad I didn't short. I need to be on the other side of this POC somewhere. If you put a short on here now, you'd have to put your stop over the RVPOC, in my opinion. And that's 5 handles away. So that's way outside my risk parameter. But if we get under this low and this gap, I think we're going to have a substantial move to the downside. And now I'm in a real quandary as to I hesitated here. And now we're starting to see that fuel kick in. And so much for that. So much for my big drop after the low. And we only took out 574 stops, which is phenomenally amazing to me. And back up we go. So it shows you what I know. That's why you don't predict the market. You just anticipate what you think is going to happen. And I thought it was going to go down. I anticipated that we would have this IB low would have been a good idea entry location. Anticipating a further an IB continuation rather than an IB failure. And the only thing that's a little scary to me about that is we've got all this fuel and stuff right above the RVPOC up here. And believe me, there's a lot of, all the people that are betting on the short have got their stop right there. And this is also an IB continuation setup, which I'm just talking, not trading. That's almost as dumb as rearview mirror trading, I think. So let's see if we get back up here for another opportunity to enter above these swing highs. Ideally, we would get above this POC and not get anywhere. I'm thinking that if we can get up to the IB low, and we've tested it only once here essentially, and now they're gonna rub my nose in it, and here comes FOMO. Oh, get on! What'd you miss? What'd you miss? Yeah, look at there. Oh, there I go. Oh man, I missed my entry. Damn. Something that I should mention about my keyboard entries and having the dome selected. If the focus is off of the the bookmap application, you keyboard and it doesn't work, which I just got through experiencing right here, because I had been looking at either I don't know, where my mouse was, where the focus was. That's why I click up here to keep focus there. But that just cost me a scale, and to be short at this location. Now, if you trade with the chart or both, well, the chart anyway, obviously you'll never have that problem, because when you click on the chart to enter a trade, that automatically centers the focus on the application. Boy, that's God darn irritating, I'll tell you. That was like a gift from God right there. And when God gives me gifts, I appreciate her. As the old saying goes, when God created man, she was only kidding. I think my wife had a t-shirt like that or something. If not, she ought to. Well, I am pretty darn disappointed about this now. Son of a gun. Look at there. I'd have been short at 5. If I just didn't see it and didn't try, to activate, that's one thing. But when I make that mistake, that's really bad news. And I don't know if there's a way around that. I understand that the focus has got to be on the bookmap application. I mean, from a programming point of view and software point of view, the focus has got to be on the bookmap application in order to have the keyboard. Otherwise, you'd be typing on your Word document and entering trades right, left, and center. Now we're coming back up again. I have focus on the app, and this is where they will not respect the IB high and or low, and they'll go blowing through it up past the POC. So now I've entered. I'm not risk neutral scaled. That would be here. We'll see if we can catch that risk neutral scale before we get a stop. The stop is above the VPOC, so that's a fairly good asymmetric trade location. I'm just a little bit leery about the price action at this point. And of course, the deal is to get below this consolidation here, just to tap out that scale. And that's what we've got to get around this consolidation, which it looks like we're going to do. Couple more ticks, kids. All right, there we got our risk neutral scale. Now I always move my stop just under the break even to cover commissions. That's no problem moving my scale towards entry. It's when you start moving it away that you're kidding yourself. And this happened yesterday. And ended up with a scratch, which may happen today. I would say so, from the looks of it. And which always brings into question, so do you immediately bring your scale up to entry, and then you've at least locked in that first target? And that's, the $64,000 question. Oh, there we go. So that's a scratch trade. But the beautiful part of that was I was scaled and risk neutral. And I'm pretty good with that whole thing. I took an asymmetrical entry. I was just late. But in reality, it hasn't pushed past my parameter here, my scales here, so it's not a problem. This is the joy of trading. Cost me nothing. But not that far. Now it's going to be disappointing when it goes down to my target. And I didn't re-enter, which is what Tom's good at. I'm sure if he had stopped as I did or scratched, he'd have re-entered up here. And that would have not been, the reason I couldn't really is it's not really qualified for the range. Would have been scaled, and then I'd be down here looking around, hoping for lower. And at some point in the day, I would expect, again, like I said at the pre-market, profit taking by all of those guys, all of the big traders that have been, all of this selling has been sold to someone, right? So all this way down, there's been buyers. And at some point before the end of today, I would expect, those buyers are going to want to take profit. And now they're going to punish everybody that's suffering from FOMO. Now I would have to really stop and think about this because they've had a whole bunch of times to take it lower, get below. They got into that gap just a little bit, 2 or 1.5. There wasn't a big stop run. So that kind of says to me that we'll be looking for a squeeze higher, but that's just me. This is an area that's not tradable for me. The POC's been here for a long time now, and I don't trade from the middle out. The only time I take a trade near the POC is in the case of a VPOC migration, but that's been some time ago now, and I don't think it's valid anymore at this point. Of course, the minute I say that, of course, it takes off for the upside. Taking a scratch is fine, and I'm completely okay with that. But when you look at what the market has done so far today, such a, what are we talking here? 36 to, 30 points. There's a 30-point move in there with several pullbacks that I didn't take advantage of. So that's my problem. That is a problem. We get up here into this 16 area, and that would be a relatively why don't I see the VWAP here? The RTH VWAP, which is this line, and that flag should be right here. So something's wrong here. This should be here. And this mid should be here. That's just magical. So something's all goofy with the ETH or Globex VWAP is correct. This mid should be here. That's the that's the RTH mid. And this is the VWAP and the VWAP, and this should be down here. Now I need to see if there's, let me see if this RTH VWAP, the hell is this? I don't know where this time is coming from. How crazy is that? Oh, God. That was something. And this is, I mean, the time is correct here, 0830, but where the hell is the date? You know, the 16th of September, 2024. I went through this once with a technical guy from Bookmap. Oh, I'm not showing you the picture, sorry. I went through this once with a technical guy from Bookmap, and I understood that that I had this set up right. And until the time change, it was working. Always some crap, I tell you. And the mid is off also. Yeah, this is complete crap. These both started at 7:30 and not 8:30. What the hell? Wow. Well, that's correct. That's exactly what's wrong. The mid and the VWAP are now, for whatever reason today, starting at 7:30 instead of 8:30. What the Christ is... That kind of stuff makes me crazy. I can't trade if I, what else is wrong? That's my problem. And now we've, tested up above, traded down below, and what's going to happen now? I don't know. Boy, that's irritating. Hmm. Well, I'll try resetting this to something that's real. And see if that makes a difference. That changed the VWAP to the correct setting. There's the mid. Here, look at this. God damn it. That's pretty amazing. Okay. Don't ask me. But I'm guessing that it's going to be okay here pretty quick. The mid hasn't recalculated yet, so that's kind of bizarre. We'll see what it does. And now we're getting a sell-off, and I'm busy dorking around wondering why the data's not right. Jesus, that's frustrating. Here we are back into that gap. Past my take profit again, or my scale. There would have been my take profit target number 2. And I'm still wondering why the mid hasn't updated. How do I did it? It did it again. Apply. There we go. There you go. Didn't see the apply part. All right, so that should recalculate. Now the mid ought to go where it belongs. Oh man, what a freaking joke. Before they did all this anchored stuff, there we go. Before they did all this anchored stuff, it was just real simple. It was all based on this, on the chart session time for this volume profile. It worked great. Now they've got all these anchored VWAPs and all this stuff that other people like to use, and I can't seem to get it to work right or consistently. It was doing okay until the time change, and then that doesn't seem to be automatic with all of these bits and pieces they have. You'd think that would be somewhat normal for them to do, but apparently not. So we're testing up to the bottom of the developing value area low and the previous low. I still think there's going to be a blowdown through this gap. But where would my trade be? This would be breakout. My trade would be right in the middle of all this traffic. So I would say that that's a low percentage trade to try to do. As much as I'm going to be mad when it, goes zooming down through this gap and they start hitting all the stops. 629 out. The place to have been on it was up here when I wasn't worrying and not be worrying about why the levels were all wrong. In my defense, however, if the levels are wrong, it means there could be potential data issues everywhere. So that makes me cautious. Where are we now? 10:44, coming into 11, and I'm assuming that we're going to get a breakdown. That's what I'm looking for. We are pretty much, obviously, we're at an outside edge, and there is taper or excess down here. Have no clue which way they're going to go here. Traded right up to the IB low. Didn't get anywhere. Buyers didn't engage. And now we're getting some selling. Would be an impossible trade for me with the POC a 1.5 above it. That doesn't make any sense to me. But right now they're 5 points in the money. So who's right? I guess not me. And here we are at this next fractal, or this next consolidation. We traded up here. We didn't get over this one. Back down to this one. This looks like a job for a sandwich to me. Well, again, I guess I've just got to be a big boy and take the damn IB continuation trades. Figure that's where they're going. Whether obviously you're never positive of anything. The outcome's always 50-50. So I need to be more at peace with that, I guess, or more undetached from the outcome. My initial FOMO feeling would be to short right here in the breakout, looking for the breakout lower. But that's contrary to my plan and my better judgment, even though it may work out fantastically. And we've got a previous MCVPOC down here at 78.75. Oh, there's a little bump down there that I was looking for. 500 contracts out. And this is there's an MCVPOC at 78, 58, 78, 75. This is a previous one from back some time ago. But there is the gap went over the 58, 78, 75. Now let's hope I've got it where it belongs. Right there. So this one is we jumped over this with the gap. This is from a long time ago. And they got through that liquidity. The next bunch of liquidity is living down here at 90. here's a bit of insight into my thinking. I think I'm looking at this pullback above the developing value area high, or low, sorry, as a shorting opportunity, which would have put my, didn't take it because it would have put my stop in the middle of this big secondary, almost the second largest distribution here, where we have traded a bunch of times before. It was in alignment with what the direction of the market, which is lower. But I didn't consider these trades down here as a mean reversion back because of the market direction. Now, I don't know whether that's all of that is valid or not, and I'll sure be disappointed if this breaks down. It's already gotten down to a scale, right? 98 to 95. And then breaks further. But yeah, that's just, I was just sitting here thinking about that, and I thought it would be worth putting on the stream for my, so I can analyze it later when I review the stream and see the market in front of me. And all of this is just what if, right? It's all, Tom has a saying, if this, then that, if not, then what? So that's a pretty good way of looking at it, I guess. If this, then that, if not, then what? Well, I'm sure glad I didn't take the IB continuation trade here. I discussed it at length, being apprehensive because of the proximity of the POC and the stops that live above there. That's where I've got to just stop overthinking this stuff and put the damn trade on. You know, it's either going to stop or it's going to scale and become profitable. In this case, it would have been really nicely profitable to the tune of about 15 handles so far. So that's it. I think that's really the bottom line. I just have to start trading more. Less analytical, less cautious, and more trading. And here we are, trading around this little consolidation up here to the low volume node. We've got quite a swing high here, close to that. Would this be a spot that we would take a short? Not nearly as convincing as the test of the IB low. And we're below this gap, not seeming to have a lot of traction to the downside. Kind of funny to me, but seems like the thing. I got to figure out now to get this mixer shipped back. Maybe I'll call the company and see what to do. Interesting test here, huh? That doesn't even connect to anything, but these balls are delta, right? So that means there's a buy delta up here at the top, but we come up and only get 2 out. Actually, it doesn't make any sense. And you notice the blue line doesn't go up here. That blue line is the last price. It doesn't even show that there's any last price up there. I'm not sure how in the hell. Oof. Not sure about any of that. Pretty sure I'm glad I didn't short that. Any of these areas would be get on spots for a short. It's just kind of they're kind of an outer space. This is sort of close because it's where this last swing high was. And it's, we're now substantially in the money. So that would have been a good place to short. At this outside edge, basically a mean reversion around here, or if you want to look at it on the chart volume profile around here. So yeah, that was a missed opportunity right there. going to get about the process of sending this mixer back. Hopefully I can get, I don't know what that'll do to my ability for the stream next week. I have to give this some thought, actually. But I will, this has definitely got a problem with channel 1, I've determined. And channel 2 now is sounding pretty well, pretty good, or at least passable. Yeah, damn, I would have been an excellent short. Met all my criterias, was asymmetric, was in a known location. I mean, a qualified location, trading in the direction of the context. Yeah, that was truly a missed opportunity on my part. And that's something I've got to get over. What I'm referring to here is this, this short from the swing low here. And it's the outside in. It's in the direction of the context. Market has been major down all day. We're into the gap from the election gap, or whatever the hell you want to call that. Over here, we're in this gap now. This is today's trade, and we're in there. So, yeah, it was a real missed opportunity. That was really stupid. That's a lot of money laying on the table there. And there's that drop below the gap that I've been looking for. Well, that's pretty disappointing. I just get on the phone to turn about the mixer, and there went my there's that stop run. So there's not quite to the 78 quarter yet, but getting close. Yeah, this was a real missed opportunity up here at 97. Wow. Disappointing. This is a hard place to trade. Yeah, the swing high back up here to this equal area. You could sort of say it's a mean reversion around here, bobbing back and forth above the developing value area low. But that's a pretty dicey, for me anyway, that's a pretty dicey call. It's in the direction, I mean, everything's okay. It's in the direction of context. There is the 3-point, well, no, never mind. It's only 2 points of range. So that wouldn't have been, that wouldn't qualify as an entry. So there you go. And now, of course, with the trade, they've moved the developing value area lower. So that would be, it would qualify, but at the time of the entry, it would not have. Now, up here would have qualified. That's one of the things, that's another one of the interesting points of rearview mirror trading that always tickles me about some of these internet gurus where they're talking about this and that around a price level, and for a fact that the price level was somewhere else when they're talking about the trade. Perfect example just now. The developing value area high was up here, low was up here, so the range did not qualify. Because they traded down through here, they brought the developing value area lower. You look back in the rearview mirror, and this is a great entry. And now we're back up to that swing high area. It looks to me like they're kind of bottoming here, though. They've got a higher low. I mean, they're going to make a liar out of me, of course, and take it down to the scale at least. But that gave me pause right there. And there would not have been a scale. It would be a point short of a scale. So still not great. The risk reward is no problem. Is in that it's at a level that's in the direction of context, and there's enough range to the scale with no obstacle. But the problem is getting to the scale when they're now kind of bottoming out and their buyers aren't really getting anywhere. Sellers aren't getting anywhere. Buyers are bringing it up. They could well trade up here again to these levels and then short some more. And we're also approaching the noon hour, which has got a typical behavior to reverse, take some of that, take some profit for the morning trades. I'm almost kind of afraid to say it, but it sounds like the volumes and the settings are okay on this second channel. I just need to get this thing sent back so that I can get one that's not got issues. Channel 1's not working. Well, it doesn't look like I was too right about that, does it? That was a nice mean reversion outside in to the developing value area low again. And we're making a lot of headway across this gap. Well, now we'll see what the shower did here. Let's see. The cats are pleased. Had a family intervention. I needed a shower, so so be it. Okay. Again, we're just mean reverting back and forth. God damn, I am sick of that damn mouse doing that. So we're just mean reverting here. Beautiful swings off the developing value area low. And if you look at the Renko version of the from IRT here, what have we got? Lower highs and lower lows. And this little pullback up here. Now that's not to say that the context of the market might change completely over this noon hour or before the close of the day. But right now, the context is absolutely down. They didn't even so much as wiggle about closing that gap to the upside. This is the gap high from the 6th. That's this gap right here between the election night madness and over here. Now I've got to get, when I get the new mixer, I've got to get that noise gate straightened out so all this background banging and clanging, typing goes away. I wonder if you can hear this. It sounds like you can. It looks like you can on the that progress bar, whatever that meter thing is. Oh yeah, definitely hear it. Well, anyway, okay, great. So I'm going to mute off here. I'm happy that the audio is doing what it's doing. I'm kind of disappointed in my trading. I mean, one trade and a scratch, so that's to be expected. But I was on board and should have been on board ahead of these moves down, especially that IB low continuation at about 10.50. All right, so it looks like they did the phenomenal here. They traded this thing all the way down to the micro composite from this long consolidation area, and well into about halfway, well, not quite, close to halfway across the gap from election night. So when the market goes down to go up and goes up to go down. And that's about that. Let's see what else is going on around here. Well, I'm sure glad that I didn't listen to myself or take this IB low continuation. Man, as I was talking about earlier in the stream an hour or so ago, before I went and had lunch. Look at that. Quite a sell-off. Another one of my rules is don't walk in cold and think you're a trade star. I've done that more than once and gotten hammered. I always have my, there's no specific amount of time, like 15 minutes or something, but like right now, I come in, I was away, I walk back in the office here now. I see the big sell-off that I had anticipated and spoke about a bunch in the stream earlier. And of course, the FOMO sets in or whatever, and you start thinking that it's the time to get on the market. But very definitely, I have learned the hard way that I need to become acclimated and back into the swing and the groove, so to speak. So that's what I'm going to do now. And we're just approaching the power hour, so let's see what happens. And they may squeeze them. This may be where that squeeze starts to kick in, which I would not be at all surprised about, and which I have already talked about earlier on. This is a Friday afternoon, after all. Who wants to be long? Or I'm sorry, who wants to be all short like this? There's the day. So we have a higher low on this big move up to the low volume area here, or low volume node, whatever you want to call it, right about this support level here, this previous swing high, sort of. So let's see about that. Over on the market profile, or the book map chart, there's that low. Here we are. Look at all this absorption going on up here by sellers, and right at this swing, at that swing high. Hard to keep my perspective with scale on the book map. This didn't look like much a minute ago when I rolled way in looking at the bigger picture. This is 3 handles there, so that gives it a better perspective. And we got all of our levels above mid, the POC, and the VWAP. Right at the, if I'm not mistaken, yeah, right at the IB low. So that's a pretty popular spot. And the Globex VWAP and developing value area high. Huh? Oh yeah, okay. Wow. Let's talk about one of the things they used to talk about a lot in the market profile world, especially Jim Dalton, was value migrating. Value is overlapping to lower, values migrating lower, or whatever. Well, this is the developing area high and the developing value area low. Look at that over here. Here's the day's trade. And the value area is way down here. Quite a long way from yesterday, which is way up here. So here's our value and everything. Here's our gap. Never even looked into closing the gap and traded hard all the way across it with the value area low, migrating much lower to boot. So that's pretty interesting. Not saying I know how to trade that, but One of the things I find about Bookmap is it's real easy for me to get lost in the minutia. Hard for me to keep an eye on the bigger picture, unless I do this, and then I lose that. This is 1 point increments here now, so that's kind of a hard thing for me to relate to. And we've come around this from the outside in, and now we're down to the bottom side here. Where are they going to take it further down into this really low volume area? Or what are they going to do? And we're coming on to the power hour at 2 o'clock, 1400. One trade for a scratch. No problem. Pretty embarrassing. As my general preference is to short, so it's pretty embarrassing to have a day like today and not have made a lot of money on it. And there's 10 points on this swing. 97 to 87. Selling down now to developing value area high pretty conclusively. This is a major level. This is pretty incredible how they came right down here and stopped short. Is that higher time frame driving that? I'm not saying I know the answer here. It's because this is really uncharted territory, right? A value area low. I said that wrong. I just was listening to the stream. To the value area low, not high. Pretty solid line in the sand there at the at that developing value area. It looks like 4 points. Anyway. And what happened there that would have been a clue for that? Well, we had 280 stops out here. We had buying absorption here. They test up and come back down, and there's only one stop out here. That would suggest that they're not getting any fuel down below here, so away they go. would still not be out of the scope of possibility here for a squeeze, in my opinion. Typically, I would not be interested in any kind of a long on a day like this because it's counter trend trade. As the time draws towards the close here, though, I find myself thinking, well, are they going to start the squeeze? Is it going to make some sort of a comeback up towards the mid, VWAP, those kind of things? VPOC, which would be obviously long trades. The opportunity was this test of the developing value area low, and for the reasons I just mentioned, and then long, so you're scaled, and then some, and then you just put on your helmet and see what happens. Now is not the time to do that, in my opinion, because you're putting your stop down here at this critical level. So that's FOMO-y. Fomito. I have no idea what fear of missing out would be in Spanish. These slow grind things like this are pretty much impossible for me to trade on. This was the entry, but this kind of thing here, no substantial pullback, there's no substantial anything, it's just a slow grind up, and that's hard for me to do. And that might be, this could be an indication or a symptom maybe of shorts taking profit, right? There's covering slowly, small amounts. Got an hour left, less than an hour left in the market. The cash flows anyway, and we've now rounded this distribution pretty close, and we've there you go, and now the squeeze hits them, starts to hit them perhaps. The shorts sellers have absorbed about 900 contracts right up here. Or the sellers, I should say, not the shorts. Double top at a swing high. Easier to see for me over here. This is a pretty popular area right here. Since 10:30, 11. This distribution. We've come up here a number of times. Oh, and look what happened here now. The VPOC migration. My. That's a pretty significant statement about where value in the market is heading. Had I been a little bit more on the ball, these VPOC migrations here, of course, there's no way you stood through this one with a stop. But, you know, if you look at the big picture, review your trading, it's perfect. And maybe this is a classic VPOC migration entry. Or VPOC migration lower, trades up above it, no buyers hit into it, and you take the sellers down. If you took that trade right there, you're not scaled yet, but close. And if you're long off of that previous dip down here that I was talking about, you've still got your helmet on and you're scaled, and we're all excited right here thinking it was taking off. And now it's a little more troublesome. It's a caution Will Robinson moment here. I would like to short this thing because I like to do that. The context is down, but the time of day and the time of day that VPOC shifted, with all of those people short, I am not going to do that. And it's also end Friday afternoon. I guess that means I'm somewhere inside of my head, I'm still expecting or suspicious of a squeeze. And this is exactly why, I guess, I didn't think that this was a good idea. It's a classic setup, though. Or this is the classic setup. Or this. And not so much this. Okay. Pretty quick you're stopped out on any one of these trades. Oh boy, so Friday I got to start thinking about what else I'm going to do here. 1500, I go pick up our daughter. I end the stream. I'll make sure I've got the chapters right, and this stream will stay public because there is that one trade, albeit a scratch. But that's my rule. I'm still thinking that squeeze will happen, and that will be pretty interesting. But not for a while. It won't for a while, but well, in theory there, if you shorted right here on the V and call that your VPOC migration, you'd be scaled. Now the VPOC has just moved up a little bit to here, not much, but one. And that would have been an interesting opportunity for a long, but that's only in hindsight. And we're right up here at this low volume area, the outside of this major distribution, where we have not gotten above that for the last, since about 10, so let's call it 11 o'clock. There was a big test up right to that thing. Here's another test swing high. Here we are again. Let's see if we can see 11 over here. And here we go. Oh, that's 12:15. Okay, we got to go further back. There we are. Look at all that. Look at it, where that level's held. Yeah. And that's a pretty precise points there. Not such a big area, more precisely at a level, almost a line. So Oh, are they going to get the squeeze going? Seems kind of early to me, but well, it is 14:20, I guess. Okay. And we have market on close orders report at 1450, which usually has some market moving energy. And here we are at the gap high. Now remember that that gap is not from today. That's the gap from Tuesday night through or Saturday or Wednesday. That's this gap high from this candle. The low of this candle is the gap high. And this is the gap low. We're now trading at the gap high right there. See that? Or we were, I should say. And back down to the VPOC. There we go. Looks like that gap high had some authority, I guess. You can see one of the things that's kind of peculiar about IRT, and I'm not sure if it's been, if there's a workaround. You don't have a line of price. This little indicator over here, this little white guy with a little nubbin that comes out, little stubby thing there, that is price. So the price is currently trading right here. I never pay it, doesn't matter. So same thing up here, you can see the price moving around. That's that little indicator there. It doesn't have a line that shoots across or even halfway across. I don't know why, but that's how they built it, I guess. Chad Payne, Bill Lynn, and Chad Payne. Chad finally left about a year ago. Too bad. He was basically the architect and the coder that did all this stuff, and he was really helpful, nice guy. He probably just got fed up with it or made so much money he didn't know what to do with it. I don't know. I hope that's the case. I hope he's living the good life somewhere. If I'm not mistaken, they're from North Carolina or somewhere like that. South Carolina, maybe. Anyway, whatever. Back to the VPOC, not a place for me to trade. This VPOC migration hasn't worked out too well for many people. I know I heard some people getting long up here, or getting short up here. That probably didn't work out very well. All right, 30 minutes to go here pretty quick for the cash close. The market will continue on until 1400. I'm sorry, 1600. Football. But I'll turn off the stream at 1500, which is a cash close, or just a little bit after that. I do let the stream run until I get back from picking up our daughter, but and all of my recordings are the full session, unless something happens, like I don't know what, Bookmap folds up or Rhythmic takes a dump or something like that. But all of my recordings are from 1700 until 1600 the next day, which captures the full session. So, if you don't play, you can't win, right? And I've been recognizing, and I will think about it long and hard this weekend, make some changes in my trade plan, which you should never trade during market hours or change during market hours. But I'm going to mentally make more trades, intentionally make more trades in a day. Set some sort of a number for myself. I'm quite comfortable with the fact that I don't have an over trading problem. When I started trading back in 2000, late 99, 2000, .com bubble, I'd make 150, 200 trades a day. It was crazy. Didn't have any clue what was going on. Just, bright and shiny. Ooh, shiny. Yeah. And I probably am more the other way now. I probably suffer from paralysis by analysis, actually. So I just have to strike a happy balance there. And that's the reason it's so important to me to vet even one setup and then just take that setup and then add to the next one and to the next one. And that's how I believe you build a successful, consistently profitable trading business. I talked about the trading as a business, not as gambling. It's a business of statistics. There'll be a chapter in the stream. Go back and listen to it at some point. There's a reason why I repeat several aspects of this trading and stream every day, and that's to reinforce in my mind those principles. The numbers, the pre-market, the reason for the stream is obvious. The numbers, the pre-market, but the things like the trading as a statistical business, not a video game or gambling, and asymmetric trading, that stuff, those are all to reinforce in my mind, my brain, so they become an unconscious competence. And remember, the purpose of this stream is my trading journal. My talking or narrating is so that I will understand what I was thinking at that moment in time, and obviously the video shows what I was seeing. So when I replay these streams or review them at some point, I have the whole package. Oh yeah. So if they just kind of fiddle fuss around around on the the VPOC here into the close, which is entirely possible and probably likely. It'll be, it'll be what it is. My only thinking was that there's an awful lot of shorts in this market for 2 days. We had a big short yesterday, a big gap down, more shorts today. That could be, of course, selling for the big rambunctious maneuvers up. These could be reacting to this. Sorry. You don't know whether, when you see these delta bubbles, these selling bubbles along here, these sell orders, you don't know if that's initiating or covering. But somebody's got to be taking the other side of them. That's the thing you've always got to remember. No matter if it's, it's not against a machine. It's not against a pool of stock. It is another trader on the other side of that contract. So even if all of these shorts today were covering from all this longs up here, that they squeezed them all out, somebody took the other side of all these selling. So somebody was buying all the way down. Somebody's been buying all day yesterday. Somebody's been buying all day today. And the only way that somebody is going to profit is for this market to go the other way. And that's why the old adage, the market goes down to go up and goes up to go down. It has to. Otherwise, it'd just sit there. And there's a lot of people that believe in fair market value and, market theory and all that, efficient market theory and all that stuff. In my opinion, 90% of what we see is pure speculation, having nothing to do with value of the S&P. When I trade, do I care what the value of an S&P is? Do you? Hell no. You care that if you got short at 95 here, it's going to get down to 98 to 85 or wherever your target is. That's what you care about, and that's speculation. The closer we get to the close, the more, I know this sounds kind of silly, but the more cautious I become today. And that's because there's nothing, your psychological capital is really, really important. And for me, particularly, I can only speak for me, there's nothing worse for my psychological capital than to go into a weekend in the hole. So I'm probably more cautious on Fridays, especially Friday afternoons, than normal days, because I don't like that at all. They're building up for something. There's a lot of buyers wanting to get somewhere, and they're not. Sellers, I'm sorry. Jesus. Got absorbing 347 of them right here. And still the sellers made some headway. A lot of delta going on here. You can see these right through this level. But trading from the inside out is never a good idea. That's the old thou shalt not diddle in the middle. That's like the 11th commandment. And especially in the last in the last 15 minutes of the day or 10 minutes of the day. So I don't know. Well, we got about 1 minute here to go from the looks of it. No, I don't know why I was doing that. Here's 1450, right? That's where we're heading. That's the MOC orders. Ooh, that was loud. Okay. Something happening there. Something happening here. Back to my conversation about market, why this market was moving, and that, you know, it's a zero-sum game, and for all this buying, there's got to be selling, and for all this covering, there's got to be somebody buying. So it's a understood concept in market profile that a B-shaped profile like this is today is indicative of long liquidation, whereas a P-shaped P-shaped profile like this or this is short covering. Now that still none of that in precludes the fact that there is two participants in every contract, a buyer and a seller. So back to my old story. For all of this buying we've had going up, there's been sellers. And for all this selling we're having, even if it's short covering, somebody's got to be buying those the other side. Somebody's got to be buying those contracts. And whenever what I was lost my train of thought there as I was watching the market, but the idea is that in my opinion anyway, who is the primary counterparty for all of the retail and most of the volume in the market in the RTH session? I believe it's the higher time frame. So if they're taking the other side of all retail traders and all hedge fund traders, then the only way they're going to make a profit is to go the other way, take price the other way, and they always make a profit. I saw some statistic. Now, I don't know. Don't quote me, right? Goldman Sachs trading desk hasn't had a losing day, a losing day in years. Think about that for a minute. And for them to win every day, some traders somewhere lost. It's not a win-win deal. It's a zero-sum game. When one wins, one loses. That's it. And that market on close orders was a fizzle. Yeah, I guess they're going to be content to keep it right here. Looks like. Now we still have, 8 minutes, 5 minutes left, whatever. And we could have a closing swing trade at the, which typically happens at after 1500. It could rip it. I hate this gradual bump like this. It's, yeah, irritating. Remember that line in the sand's right up here at the gap high. And these kind of sporadic bumps are pretty much impossible for me to trade. Yeah, a lot of, wow, look at the absorption. Oh, baby, they don't want that going anywhere. That's everybody at that gap high. That's pretty funny, isn't it? That's amazing. They don't want them back inside of there anymore. Whoever they are. 2,000 contracts, more 2,200 contracts there. Bam. Boom, boom. That's a lot of money. That is a lot of money. One contract, $1.50. So, and they keep absorbing them. Absorbing them. Some icebergs up here. 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 Two minutes. The 2-minute warning. See how the volume starts picking up with this adjustment down here? This will be an interesting day to replay and trade. One of the great parts about Bookmap, incidentally, it has a phenomenal recording and replay facility. It automatically, if you turn it on, which I have, it records every tick in the market and everything about your trades. All, you know, if you replay it, your trade, my trade from earlier today will just come on there and look exactly like I was doing it, because that's what it did. It recorded exactly what I did. The problem, why I don't use that and I do the stream instead, is it doesn't record any audio. So I would lose the narration piece, which is pretty important to get a feeling for or understanding for what I was thinking at the moment. But the replay feature for Bookmap is really great because you can trade it just like it's the live market. And so I can replay today, for example, and the bits that I didn't trade or the stuff that I wasn't watching, I can trade it just like it's today. It's just like today, and it'll trade exactly the same. Orders go in and the whole thing. It's really, really quite a tool. I don't think I mentioned the heat map, which is over here. I take it for granted and I forget sometimes. This is a graphic representation of the liquidity, the resting liquidity in the book. The interesting part about the heat map and Bookmap is you can see when the liquidity came into the book. Right here, right? This liquidity came into the book at 1459.06, and there's 142 contracts or whatever over here. So that's how it works. And you can control it and the colors and all that stuff. I just happen to like the color scheme that I have now. There's this thing, which is a little bright for me, confusing. And there's what I do. So we've got a lot of stops, a lot of icebergs. There's 3 o'clock. That's the go get the girl time. That's the alarm to go get Tam. I'm happy. And now, are we going to get a closing swing trade? Look at these stops out or absorption, and then all this absorbing to the top side. I think those are absorption, not icebergs. And loaded up down here, you see that? So this is all aggregation. Everywhere these yellow lines are, it's aggregating. It's aggregating orders because it's jammed up with volume. Now it's starting to bleed off. Well, they took it right back to the VWAP. That made a bunch of people happy, I guess. And I don't see any specific post-market move here, post-close, post-cash close move. So I'm gonna bid the stream a farewell until Sunday night. Monday morning at 0800. All right, so one trade, one scratch. I'll get the stream up after I get back. See y'all again on a bright and shiny Monday morning. Wish this ducking worked like it's supposed to. I don't understand why it doesn't. Okay.